Welcome everybody after lunch. We'll try and do our best to keep you energized and engaged as much as we can. First of all, welcome to Verisk Insurance Conference in London from ourselves. And the title of this conference is Experience the Possible. So with that in mind and taking that as an inspiration, we'll try our best not to talk too much about just the current issues, but also think about what is the art of possible for pricing in London market or in specialty business globally. So with that, I will just ask the panel to introduce themselves and maybe a little bit about the roles they do on a day-to-day. So I'll start with my friend at the end, Sunil.
Hello. So yes, I'm Sunil Kamath. I'm currently the active underwriter at the Allied World Syndicate 2232. I've been doing that for about 3 years. Prior to that, I was a pricing actuary, so share that in common with the rest of the panel. So I was head of pricing for all of our non-North American platforms, so across company and syndicate. And as part of that, I've worked on a pricing transformation project, so taking all of our tools out of Excel into an online platform.
I'm Toks Ahmed. I'm Syndicate Actuary at Cincinnati Global Underwriting. Taha, thanks for having me today. I'm a qualified actuary. I've been involved in all parts of actuarial at Cincinnati. We were acquired by Cincinnati Financial Company in 2019, and they're the 25th largest P&C company in the US. So, we're a property-dominated syndicate. I work in, like I say, sort of reserving, capital, and more recently I'm doing a lot on the pricing transformation side at the syndicate.
Hi, I'm Alice Boreman. I am a partner in EY's actuarial practice in London. I lead our transformation team, so working across kind of all things actuarial transformation, so from reserving, business planning, but actually in the last few years we've been doing a lot in the pricing space, particularly in and around the London market as clients look to re-platform their pricing solutions. And I guess the thing that I really focus on and quite passionate about within that is not to just buy a new toy, as I like to call it. The business case for a new pricing tool is not that the pricing actuaries get to code in a cool language, but actually how do you get value out of that as a business, and how do you think about the wider operating model changes you need to make in order to enable that?
Thank you very much. As you can see, we've got a very wide range of panelists, so hopefully we'll give you a very wide range of thoughts on pricing and underwriting or value of pricing. So with that segue, so in terms of, we've got about 45 minutes, so the plan really for that time to, we'll go on to talk about the value of pricing or harnessing the value of from pricing data in particular, both from an actuarial perspective, but also with an underwriting angle. And then we'll go on to talk about a little bit around how technology is enabling us to do more and get more value from that. And then finally, we'll go on to around how does, what else can we do with a mature pricing capability. So with that, I thought before, it is just after lunch, so we thought it would be good to just get a good feel of, what kind of audience in the room we have. So can we see a show of hands of, any pricing actuaries in the room? Fair few, good to see. Welcome. Any underwriters in the room? And any pricing, anybody who interact with pricing technologists, operations? Good, very good mix. So a lot more mix than I was probably anticipating. So that's great to see. And the other thing to say is, this is a panel discussion, but really a very open floor for all of you to input. So if you've got any questions, we'll have some time at the end for questions. But also, as we go through, if you've got questions, feel free to just put your hand up, and we'll try and get a mic to you. So to kind of get us started, I thought it'd be good to hear from our panel in terms of in your eyes from your roles, what do you see as the kind of the current burning issues in pricing that we need to tackle?
Thanks. I'm happy to start off. So I think, especially since I transitioned into an underwriting role, I guess the the key sort of point for me is what's the value added, where we're sort of advancing pricing technology. So really the demonstrable value of what we're doing and where we're going, acknowledging that we are in a marketplace, rates might be softening in certain areas. So how can we maintain that value add as we do more and more with this data?
Sure, yeah. I think to add to that, when we think about the pricing transformation at Cincinnati, we're very much thinking about, the value back to the company. So I think, I think it's a market-wide problem in terms of sort of connecting the information, at source throughout. So when you're thinking about your exposures, your claims, and historical premiums, I think claims messages that you receive inwards are for the claims which you participate on. So if you're a primary player, you're only really seeing the claims on those layers that you're participating on. You're not seeing information such as, at coverage level or the peril type information. The market sort of cause of loss codes are quite, I don't know if anyone's looked at it, it's not great. So I think having that kind of, harmonization across the market would be really helpful. We do stuff in-house where we're looking at our claims team. We're a leader across for a lot of the lines of business which we write. So looking at our in-house claims team to enrich this information and using that downstream in your pricing and your analytics, I think is where there's a lot of value to be unlocked as well.
Yeah, I think I'd echo all of that. I think almost everyone in the market has some kind of pricing transformation project live at the moment. I think they take very different forms, but I think everybody is investing in this space and sees the value they can get out of data. There was a statistic in a competitor's recent survey, Taha, that said I think 96% of their participants said they weren't satisfied with their existing pricing tech landscape. I'm not convinced that's particularly to do necessarily with an individual tool within that landscape, but really about how it all integrates together. And I think that's the big challenge we're all trying to solve, is those integrations across the ecosystem, both from a kind of data flows and tech perspective, but also kind of getting pricing actuaries and underwriters to be much more in lockstep and enabling the underwriters to get the value they can out of their pricing actuaries in the right way, in a cost-effective way. And I guess with two primary goals in all of that, one being kind of cost efficiency. We've heard a lot of talk this morning about the cost of doing business in the London market and the real need to get that cost down to be kind of globally competitive going forward. And the amount of rekeying and manual processes that still exist, like we need to solve for that, and pricing is a place where that causes problems. The other thing we see lots of is big statements about kind of loss ratio benefits from investing in pricing transformation, and reports with numbers that I've not quite solved how they came up with them. We have worked out some benefit targets for certain clients, but I'm not sure where some of these statistics come from. But I think there's real value to get out of that if you can capture the data and then use it to iterate and enhance your models. And we all need to get ready as the market's softening to be able to look at our portfolio and make quick decisions of where we want to exit. And you can only do that if you have the data at your fingertips.
Thank you for that. Just going back to in terms of the value. So a question I have on that is, outside of the being able to do or expose your models to underwriters to use and having kind of more accuracy in the pricing itself, is having that data unlocking additional value from for the business?
Yeah, I think so. I mean, I guess where we are now, there's a lot more value in the data than just getting the right loss pick. It could be triaging, it could be the renewal workflow, it could be a variety of things, even just issuing policies in a streamlined way. So double keying was definitely, so for our perspective, that was the one thing we wanted to get sort of away from the underwriters, and sort of integrating pricing into the PAS system was quite a big sort of challenge and an opportunity for us. But yeah, there's loads of things that we can do with pricing, and I think portfolio management, both in terms of roles and just more as a skill set, is more and more important. So looking at portfolios more from a top-down perspective and all of that data really sort of flows into that.
Yeah, and I think that portfolio management is something that we all need to have a huge focus on. We did a bit of analysis of it's based on Lloyd's data, so it's just syndicate data, but over the last 15 years, and if you look at performance and who's managed previous cycles well, it's those who are really agile and can move in and out of lines quickly and make those decisions quickly. But you need information to be able to do that.
Yeah, I mean, I'd echo those thoughts as well. I think, underwriters use there's loads of information which you're using day to day when you're assessing the risk and when you're thinking about, the credits or the debits that you would place or the, significance that you would, place on, say, deductibles or sublimits and so on and so forth. And I think having that data to hand and being able to kind of play that back to your underwriters is really important. Excel spreadsheets, loads of factors, loads of, detailed information, but when it's all in an Excel spreadsheet and if it's not going into a structured database, then you can't harness that information, you can't play that back. So, but then to your point as well, if you're an Excel spreadsheet, you get a different version of Excel, and then if you've got any level of macro or whatever it's going on to try and push that into a database, it's falling over and it's breaking. And I think that's where definitely the power comes from. If having a system which is governed and managed really helps.
Before we move on from data, just one final question I have on the data is, do you feel we as an industry are utilizing our internal data set, efficiently before looking out for data externally?
Well, no. I think there's loads of data we have. We are a data business, but it's really hard to access that data. So capturing the data is one thing, and that's great, but we then have to use that data. So as people are moving on to more sophisticated pricing platforms and capturing their data in a consistent, structured way, that's fantastic. You then need to be able to link that to your claims data, then actually do analysis on it, and actually improve your models. And so we talk a lot about pricing transformation. I think pricing transformation is just the job of a pricing actuary. There shouldn't be an end. It's not a project that ends, because you should be capturing more data, improving the models, putting the next iteration forward. And I think that's quite a different concept to some other areas of kind of tech change that are kind of, the process should be relatively static. Here, the process should constantly be changing, because you should be using that data to learn and make your model more sophisticated over time.
I would completely agree with that as well, that I don't think we are necessarily using the data that we have as well as we could. Our parent company, Cincinnati, they write, sort of admitted business in the US. I think it's about 8 billion in premium. And, they did some analysis. They built their own model. So they have to file rates, as you do in the US. But, when they've looked at their commercial property, for example, rating tools, they've tested their own factors based on, a huge amount of data where they've parameterized their models. And they've done back tests on the predictiveness of their models on unseen data. And it's far more predictive, not a dig, but on, for example, using the ISO rates. And I think having that confidence that actually, you've got a model or rating tool which, gives you a good indication, I think that is a great starting point. And then you can only do that if you are capturing that data and then utilising that moving forward. Don't you have anything to add to that?
Yeah, I absolutely agree. I think maybe the one caveat from the three of us is probably that we're talking London market here. I think maybe personal lines is way ahead of us in terms of utilising data. Certainly even, so I started my career there, so 15 years ago it was way better than what we're doing now. But yeah, I think there's always more we can do with utilising our own data. And also, I guess the challenge now is, as we're building new systems, is how to ensure that what we're doing now is still going to be relevant and usable in the next 5 years, where there's going to be even more development in technology.
And that's not to say we shouldn't be, kind of to go back to the question, we shouldn't be investing in external data sources where it makes sense. There's lots of opportunity to enrich the data where we've got gaps or use external data sources to kind of drive consistency in some of the classifications we have. So I'm kind of not dismissing we should do that, but I think there is loads we can do with our own internal data.
Thank you. I suppose talking of data, and what you were mentioning around what is pricing transformation? It's the role of a pricing actuary. I think that's the first I've heard. So we'll add that to a pricing actuary definition job description. So maybe that's a good segue into talking about pricing ecosystem. Now, ecosystem is a term that's often used, but different people often have different meanings. Any views on what does an ecosystem mean to our panel? Alice?
I'm now worried I don't know the right definition. I mean, for me, it just means you need the right thing to do the right job, and that means you're not going to have... this could be completely wrong, and I'm conscious there's lots of tech people in the room who probably have a correct definition of ecosystem, but there's like not one big system that's going to try and solve all of your problems, and actually you need to use the right tool for the job, and then you need those tools to talk to each other in the way you need them to. And that's what I mean when I talk about ecosystem, whether it's right or wrong. And the same with people groups, right? You need the different teams to be working together to ultimately get to the goal you need to get to. So we talk about pricing platforms all of the time. And to your point about kind of London market versus personal lines, most of my experience in pricing is in the London market, so it's very biased to that. But if you talk about pricing tools with a personal lines pricing actuary, they're much more focused on the model that's helping them build their GLM. They're like talking about the technical pricing platform, often, not always. Actually, often when we're talking about pricing platforms, we're just talking about the vehicle to get the model that we've built in something else to the underwriter. So it's much more a model deployment tool rather than a modelling tool. And I do think it's interesting we talk about pricing platforms, and especially when I start talking to colleagues in other countries, I always have to be really clear, what do you mean by pricing technology? Because they're actually very different things. So yeah, to answer the question, I think an ecosystem is just the collection of applications you need to do your job. But someone can tell me I'm wrong.
I mean, I think for me, if I'm going to be really honest, I don't necessarily buy into the term, pricing ecosystem. I think it's a buzzword that a lot of people use. I guess I've been maybe quite spoiled at my career at Cincinnati. I think I started since I graduated from university. I've been there over 12 years now. And when I joined, we had a data warehouse where everyone in the company could access the single source of truth information. Open up an Excel spreadsheet and you could see a cube and get to any sort of data point. And I think when I think about the term pricing ecosystem, I think about the fact that, does your reserving processes, does your pricing inform your reserving? Does your capital setting inform that? When you're thinking about planning and strategy, which are things that I'm involved in as well, having that kind of feedback loop to make sure that everyone's on the same page and making sure that everyone's moving in the right direction. That's kind of what I think about. Certainly when I'm thinking about pricing transformation, thinking about how can we leverage more of this information which maybe we previously didn't have, and enhance our reserving. If we're seeing certain trends across a particular kind of cohort, are there things we can see in reserving from that perspective? When we're looking at our capital and our planning, we're thinking, all right, return on capital at a sort of different level of granularity that maybe we would previously look at. So, yeah, that's my take on it.
Well, I once again agree. I think calling it a pricing ecosystem would be a mistake, because that just silos what is ultimately insurance data. We should be trying to leverage that across all functions of the business, having the consistency. So if the pricing actuary is coming up with a claims frequency, well, maybe that will link through to your claims team needing additional headcount. Like, these things should be a bit more connected, and I think certainly now with system transformations, we should be able to leverage that data a bit better and connect those dots a bit more.
Yeah, absolutely. And from our perspective, we are developing solutions that allows our users to connect their pricing with, whether it's a policy admin system, or whether it's a cat model outputs, or whether it's linking up with claims, making sure the data is consistent, or at least has a common data structure between them so that you could not just price but also report on them. So those of us who operate in the Lloyd's market and have Lloyd's reporting requirements, I'm sure you're very appreciative if we can pull out your PMDR returns without having to spend too much time reconciling back to your pricing tools. So just conscious of time, so we'll move on a little bit in terms of into the technology piece. Like, so I think, Sunil, you mentioned you went through a pricing transformation or going through a pricing transformation. What led you to kind of do that in terms of from a business perspective? What was kind of the key drivers for doing that?
So, I mean, I guess I'd start with Excel is great. As an actuary, loved using Excel. And I think what was successful about our sort of push into the transformation was it was really the underwriting team that was pushing for the efficiency savings of not entering the same information in multiple systems. So immediately that was an underwriting project, not a pricing project. It was fully delivering value to the business and was buy-in straight away. So that was maybe just how we were able to push forward. In the end, it did involve pushing our rating tools into an online platform, but I think especially where technology is now, we were able to compartmentalize the delivery of the rating tool, but maybe not hitting a ledger. So the ledger connection was still as it is, so the claims and reserving team and finance teams were unimpacted. So it's nice to be able to, again, compartmentalize the delivery with buy-in from the underwriting team and really try and sort of add value incrementally instead of just doing a massive build that takes years that may or may not be outdated by the time it's delivered.
And maybe, Alice, if I come to you, like, what does, thinking about the title of the show, the future of pricing, where do we go? I mean, we can see the trend. We were kind of Excel-based pricing, functions at, organizations. Now we're seeing a move towards platform-based pricing. What's next? Do you have a view on that?
I think it's an evolution rather than a revolution now. Like, I think as people move onto platforms, and there is a place for Excel, I will still defend Excel in places. But I think a lot of people are still quite early on in that journey, and I think it's an increased level of connectiveness to the pricing ecosystem, if to use the illegal word. But I think, and a continued enhancement of those models and the diagnostics coming out of it and what you're doing with the data at the back end. And I think, for me, the thing that worries me about a lot of programs in the market right now is everyone's really focused on lifting and shifting their models onto whatever new technology platform it is, and that is just the start of the journey. I think it can solve some of the rekeying pieces. Actually, it doesn't necessarily. In a lot of ways, people are adopting some of these tools today because that's kind of next stage. So I've got a few clients who are doing pricing transformation, then planning to implement it, integrate it with a wider underwriting workbench, and then. And that's fine, but we kind of have to manage, I think, some of the change fatigue of that and kind of see the incremental benefits over time.
Any thoughts on that?
I think for me, when I think about sort of the future of what it looks like, so currently we've got these kind of centralized dashboards that everyone can get their hands on, where we can pull in exposure information to the location. We can look at, I guess, obviously, like the exposures, the premiums attached to that. All of our underwriting dashboards are now in these in these kind of like, I know, reactive dashboards that everyone's got access to. So the teams can look at their portfolios every day. The data's getting refreshed overnight, and they can look at their portfolios. They can look at all of the information that's in our data warehouse. And then I think about how, with the sort of the pricing systems which we're implementing, how we're going to have a new sort of dimension of information that they can cut, that they can cut this by. So when I'm thinking about, when we're planning, I'm very much a sort of bottom-up type of person. So I know portfolio level, you come up with your plan, you're thinking about, what premium you're going to write. But I'm thinking, well, can we take it a step further? Can we look at, all of your risks which are due to renew for next year, and can we sample, using, statistics to say, okay, what is the likelihood that you're going to renew each of these risks next year, say, and then what new business do you need to write to achieve that? What are our rate change assumptions? And then when you factor all of that in with kind of, benchmark analytics, technical pricing, return on capital, I think that's when it gets really interesting. And having that kind of across the organisation, so not just thinking about underwriting, but how can that impact, our claims functions? How can we, speak with our reinsurance team, our outwards reinsurance purchasing, and I think that's what sort of excites me. And then also thinking back to capital, looking at the capital intensity, at risk level or at a really sort of, obscure, granular, piece of information. I think that's really cool. And I think that kind of, collaboration amongst teams is what's quite exciting. We speak a lot with all of our underwriting teams. We connect a lot with ops, RI, claims. We were doing a reserving exercise a few years ago, and we were seeing some trends, and we were trying to come up with solutions as to why we were seeing a particular trend. We were trying to figure it out. Had an underwriting meeting scheduled in the next week, threw it over to them because we couldn't work out exactly what was going on, and underwriter came back literally the next afternoon and was like, I think this is it. So that's what I think is really exciting when we can bring all this information and harness it and give it to everyone at their fingertips. It's that, and it's how you can then push the business forward. Obviously all operational efficiencies and all that kind of stuff is great as well, but it's how can you push the business forward and achieve your strategic goals.
Yeah, I think so too. I think there's that sort of utopia of perfect data, no time spent reconciling things for individual tasks. Two people do a loss ratio analysis, get the same result. All these sort of things, maybe we're sort of, well, maybe you guys are already there, but there's maybe this journey that we're all on in terms of getting systems online, data connected, systems talking to each other. I think in the near term, our challenge is trying to pick which ones add the most incremental value without the sort of expense burden of just investing a ton in IT or having a lot of headcount to do coding. And so that's probably the challenge in the next couple of years, where maybe the market again is moving in a direction that's not just super growth mode. So how do we pick the things that will demonstrate value quite tangibly while sort of creating those building blocks and sort of moving forward into that next phase?
Thank you. I'll just do a quick check in the room if anyone's got any questions or any comments they want to add to any of that so far. Yeah.
Thank you. Just a quick question. I work for a follow-only syndicate within Lloyd's, and I see a lot of people using a variety of platforms, going through their own transformation projects, etc. And I wonder to what extent that the time, energy, money required to lift and shift these sort of Excel platforms or spreadsheets into a web-based system is actually detracting from pricing methodology improvements. Is all of the brain power in the actuarial world now being sucked up by moving it into tech, as opposed to saying we need to actually challenge the way that we're pricing business in the first place, as they may have been if they were just playing with Excel?
I think that's my exact point and issue with where a lot of the market are, right? I think you're right. I think there's real value in doing it, but it can't distract from actually why are we doing it in the first place? And we're doing it to capture the data to be able to ultimately improve the modelling. I think the other thing is there's different people and skill sets, and so I think pricing teams are increasingly not just qualified pricing actuaries, and so it's using the right people for the right job and not making all of our pricing actuaries tech people, because that's not the right answer. It's, I think there's real value in having those people in the team, but they that isn't pricing. It's kind of deploying the pricing in an efficient way.
I would add to that. I think that's a great point. I don't know if anyone is into pricing. I think there's like loads of information out there in terms of methodology, and Pricing in General Insurance by Pietro Parodi is a great book. If anyone's into pricing, check that one out. He's epic, and I think yeah, I don't know if he's here, but I think as part of this whole process, we're really digging deep and thinking about the methods that we're currently using and the methods that we could be using. When you're thinking about using simulation methods in pricing, commercial D&F risks, for example, even for non-cat as well as your cat risks, and then having the detail in terms of all your different coverages and your perils, and being able to simulate, and then having that factor into, for example, like capital intensity, is something that I think we should be doing, and I think it's more difficult when you're playing in platforms like Excel to get this all connected. So I think for us that is really important. I think that actually for us has come first, thinking about the methods that actually we're using and we're deploying, and then thinking about being in kind of a systemized and a more controlled environment and a more efficient environment in terms of when you're thinking about simulation, how you can get that benefit downstream.
And I agree. I think it's a very interesting challenge for us all, because it goes wider than pricing. So you could say, well, we could get a system that sort of connects two things together, or you could just send it to an outsourcing company that does it cheaper. At what point do you pull the trigger and do the tech solution? And I think it just goes back down to organizationally, how do you want to structure your teams? And actuaries are a good one. Do you want a team that's delineated from building and just do parameters, which is kind of like the core actuarial skill, or do you want ones that are coding and doing release management, deployments? Maybe they need to change broker names and drop downs for underwriter names, which is very much the old Excel world of the actuaries control the tool, but should they really only control the parameters and like rate? So it starts with that, I think, and then it moves into, well, how then do you go through the transformation process?
Thank you. I think my question might be connected, actually. I've got the benefit of sitting outside the industry and in government, but I'm always curious, what do you consider to be best practice when you've got all this data across an organisation and sharing it within your organisations? Bear in mind, they could be quite large.
Do you mean within organisations or between organisations?
Both, actually.
Well,
it's not too difficult.
It's obviously a free marketplace. There's very little interaction with pricing actuaries in terms of like exactly what you're doing. This is proprietary in terms of how we make money as insurance companies. So that pricing and underwriting link is pretty much quite insular by definition, by design. But things like Gyro, that's where you get the best practice coming through in terms of approaches, the research, and so on. So there are avenues, but we have to be careful, of course.
Yeah, I think to add to that, in terms of best practice, I think I've harped on it already, but making sure everyone across the organisation can see the same numbers and everyone can reconcile, and everyone across internally recognises the numbers which you're seeing. If I've got a property binders underwriter and he thinks his written premium for this year is blah, and as an actuary I'm telling him it's something completely different, I think that's a problem. So I think definitely that interconnectedness across the organisation, having like a centralised data warehouse where everyone can access it, is probably best practice. And then and then sharing of information across the market. It's an interesting one because when you think about functions like RMSI, where they will take an SOV, a schedule of values, and cleanse that and charge a fee, and you might have 20 different markets on the same slip. They would have done the work, and they're literally waiting to hit send to the and there's 20 different markets. I think something like that in Lloyd's, why is that not centralised? For example, I think the brokers have a part to play as well in getting accurate information. Not always on an as-if basis when you're talking about claims and stuff like that. So I think that it would be interesting to see if there could be more collaboration, I guess, market-wide, without, for example, claims information, incurred claim, that is what it is, right? So that's not necessarily proprietary. If you have a loss on a building and it's a total loss, then why can't everyone see that information and know the cause of the loss and, the ground-up loss value, for example? But yeah, that's my take on it.
Sorry, maybe just to add, I guess within pricing, there's no right answers. You either write the deal or you don't. The account either has claims or it doesn't. You either make a loss on the account or not. So where the value is added and where the sort of best practice fits in is to how the portfolio management happens. What do you do with that one loss? What do you do with the account that doesn't have the loss? And so on. So the pricing actuary and the function of pricing and underwriting is very much a point in time within a chain of events. So that feedback loop is critical, but it's also very difficult to look at consistently.
I'll just add to that is in my previous life, we actually published a framework called Best Practice Pricing Framework from Lloyd's.
By you?
And so that might have some description around that. But going back to your previous point, I think that's a really critical point. I've seen a number of transformations in the market where it's very much a lift and shift, and the methodologies are still basic exposure rating and some form of experience rating, and I'm very keen to see the market move forward around that, and like the some of the points been mentioned around interlinking pricing with business planning, setting the strategic goals around growth and expansion. Those are some of the areas that we are seeing, the values being added, but we probably haven't seen enough in terms of, maturing methodologies, especially when we look at the wider actuarial community around, look at reserving, look at capital models. I think, on the reserving side, we're starting to see much more practice around, stochastic reserving and so on. So we'd like to see more of that. But I think, one of the challenge to that is the data itself and being able to, not the data, having the data, but it's actually being able to access that data in a way that you can use it for analysis with confidence. I think that's probably the biggest challenge on that. And I guess just to move on from that, which is probably a good segue, is how do you see where do you see the technology really aiding in that journey of maturity around pricing? Any examples from from your experience of working with technology in your own companies?
I think we've talked about a few. Getting out of Excel is probably a big one, but just trying to have an end-to-end system, or at least singular touch points for the underwriters, for claims, for pricing actuaries. And then when it goes around the feedback loop, things like dashboarding, being consistent, being very readily available. So trying to get data in front of underwriters without them having to request it from someone in IT or actuarial. Maybe there's just consistent dashboards where they can effectively do pivot tables directly themselves. So a bit more of a self-service type model, I think, is useful, but there's loads of examples of how that's sort of moving forward.
Yeah, I was just reflecting on kind of some of the conversation on the best practice around data, and I think, big thing to spend quite a lot of time thinking about is the kind of commonality across models and data definitions, like how many approaches to rate change can one single organisation have? Lots. And how do you just have I think technology enables that kind of modular way that a lot of kind of pricing platforms are now being built out. It enables a much easier way to kind of force some of that commonality where it's appropriate. And then if you've got those common metrics, you can have the right conversations and the better conversations. And I think the thing, we've talked quite a bit about portfolio management, and I'm conscious portfolio management means a lot of different things to a lot of different people. But for me, that is as much about the conversation we talked a lot about kind of process and getting things into the system and having the data available, but a lot of that is about having the right conversations and leadership being able to challenge lead underwriters on a particular line about what's going on in their book, why they should continue to invest in it, what actions they want them to take, and holding them accountable to that. And it's really, really hard to do that unless you have at least a baseline of common metrics. There's then always going to be stuff that's different. But you need some kind of common core as leadership to look across your portfolio and make those challenges and those calls and have rich conversations. And I think technology does enable you to drive that in a business. You can do it other ways, but I think it does help kind of force it through.
Yeah, I mean, I can add as well. Lastly, yeah, hate to say it, I'm quite bullish on kind of like, I guess, AI, and I use that term loosely. When I think about AI, you're thinking about, machine learning or even like RPA, like robotic process automations, all the way sort of through to, like neural networks and stuff like that. And I told the story about there was some reserving trends which were just difficult to identify because we just didn't look at the data that way. And having kind of a process or a I don't know, whatever you want to call it, an AI, just churning away in the background, looking out for these things and just being able to flag and say, hey guys, like, have you noticed this? I'm seeing this, right? I think that's quite interesting. So when I think about, how that can help underwriters and actuaries and, from an ops perspective as well, I'm quite keen on the idea of an underwriter opening, their pricing tool, and a lot of the kind of really basic tasks which they would do. You get a broker submission in an email, and maybe an underwriting assistant does a bunch of work to get it to a place where an underwriter looks at it. I'm keen on the idea of actually, look, can we just present that to the underwriter almost final, and then they can do their work to it and do the real value add stuff. And then underwrite. It's a bit of a hard one because then you get the assistants. Maybe that's where people learn and stuff. But I don't know. I'm quite bullish on that sort of that AI world.
With just the last couple of minutes, so I'll just ask one more time if there's any final questions. Otherwise, we'll wrap up. Any questions? Okay. Well, there you go. The future of pricing is getting pricing connected to underwriting. Using the data to do more within portfolio management. Better insights for underwriters to make better decisions. So you heard it here first. Thank you very much for your time, and hope you enjoy the rest of the afternoon.